Hello and welcome, ladies and gentlemen. I'm Hiral Dadia. We have Madan, Sabnavis, Chief Economist at Care Ratings, joining in. Uh, a very warm welcome, Madan. My first question coming to you is, with these unprecedented times, the kind of impact the pandemic is having on the health of individuals, with that, the health of the economies across the globe is also something which has been impacted. What is your growth outlook for India vis-a-vis if you have to take the other developing as well as developed nations into consideration?
No, in fact, we have done our working of what the GDP growth may look like.
Mm,
And we've gone by it sector by sector, looked at the composition of GDP. And we've seen which are the sectors which would be growing, some which would not be growing. And see the sectors like agriculture, the government sector, banking and finance, telecom, some part of manufacturing, like the FMCG goods, pharmaceuticals, would be the ones which would be driving the economy. Lots of other industries, especially in services, would be in the negative growth terrain. And the number we've come up with is 1.1 to 1.2%. Now, this number of 1.1, 1.2 should be juxtaposed with the IMF number of 1.9%. We
mm,
don't have any other official number because I think the RBI has been very prudent in not putting any number. Because even when we have drawn up our growth rate of 1.1, 1.2%, it's based on certain assumptions which we made about when the lockdown will end. Now, frankly, none of us know when it's going to end. And I think the two major problems which we have post the lockdown being removed is labor and restoring supply chains. I think these are the two things which have been disrupted to a very large extent. So based on the kind of assumptions we make that things will get right in 2 months, 3 months, 4 months, I
mm,
think that's how we have come to this particular number. But I would like to point out here that the number of 1.1, 1.2% should not be looked at very, very positively because we won't get a semblance, we won't get a feeling that we have a positive growth. Because I think normally it goes along with employment and it goes with demand conditions. Both of them will continue to remain fairly, I would say, fairly adversely affected. So we'll have very negative demand this year. And I think employment will be even a major challenge as the unemployment numbers. So 1.1, 1.2% without really giving you the sense that there is growth taking place, you may still think that whatever normally happens during the recession is around us.
right. So, Madan, I agree with you that yes, the 1.2, 1.3%, that's a number that we should be looking at, and that's a consensus that we've been watching out for as well. But if you're saying we don't have to really take it positively, if you have to compare this to other economies as well, don't you think it's a better number? Because if you talk about India's real activity, I was just looking at the Brookings FT Tiger Index, which was released in April itself, and that real activity actually started declining in July 2019. Now, with that, the consensus forecast for India, if you have to take rating agencies into consideration, is approximately around 3%. If you have to look at developing countries or the other developed countries as well, everyone is staring at, say, a negative GDP already. Do you think the shape of recovery is going to be better for us then?
No, actually, no, Hiral, the issue here is that 1.1, 1.2, or whatever positive number we're talking of, it's only a statistic when you're talking of a positive number.
Hmm, hmm,
And if and we're getting this number because of the way in which GDP is calculated. Like for example, I said that agriculture is one sector which is going to do relatively better. We may still have a 3% growth coming through. But if you ask me this question, will the farmers actually be receiving the right kind of income to create that rural demand scenario? The answer is probably not because of the supply chain problems which we
hmm,
have, and we haven't really addressed them. Because we should remember that if we went into a lockdown, I think there was a lot of patriotism at that time. We all said that this is the best decision. But unfortunately, I think we haven't seen any kind of affirmative action coming in terms of spending of money to really
hmm,
rehabilitate people. Now, just look at that 1.7 lakh crores package. Now, I don't have really access to what's happened to that money, but whatever you read in the media, you get the impression that most of this money has not really reached the people. Now we're talking of post May 4th, there are 2.3 million migrants. That is what, again, one of the newspapers have reported,
hmm.
saying that these 2.3 million people are going to go back home. Now look at this situation, 2.3 million people go home. When are they going to come back? And do we have a plan to get them back? Do we actually have a plan to revive the economy as to what do we do after the close down ends? I think that's not very clear because ours is a federal structure. Every state has their own view. Every state is going to follow its own process of moving out the lockdown. Everybody's going to have their own red zones and green zones, so on and so forth.
Mm.
So therefore, the number of 1.2, 1.5 may probably look better than the recession conditions which we are seeing in the developed economies. But I don't think it's something for us to be too cheerful about, because I think we talk to industry today. We are in touch with lots of people in industry, and all of them are saying that look at the kind of stimulus which has already been provided by the developed countries. They go to 10%, 15% of GDP. What we see in India is not actually adequate. It has to be
Exactly.
more aggressive. Maybe the government has something in mind, but it hasn't come out so far. And it should not be a case of too little, too late. That by the time I decide to do something, the 2.3 million migrants, maybe the numbers are larger, they're out. Do we really know how the transportation system is going to be revived? We're all saying social distancing means transportation is out for it. Then how do we get the people back? So while you're opening up industries, in fact, we've been talking to some people even in the FMCG sectors. They're saying, look, I don't have
Mm.
the labor to produce. I can open my factory. I don't have labor. I don't have people to carry the goods, and I don't have trucks to transport the
Correct.
goods. So therefore,
Correct.
these are the supply chain bottlenecks which are there, which we haven't yet addressed. So therefore, I'm not too sanguine about this number of 1.2%. Statistically, we may still get it. Maybe the government spending will add to this number, but we will not be seeing any signs of real growth in the sense that is employment. I think employment will be the barometer of whether really growth is taking place. That's not happening. Lots of people have lost their jobs, they're getting partial salaries. So that's not
Mm-hmm.
something we have to
Correct.
really
Correct.
worry about, even though statistically we're 20%.
Right. So, Madan, are you also expecting further relief measures, to come in from the government for the industry? Because, I was talking to Amitabh Kant as well, and he was indicating to us that clearly the government is now looking at the priority sectors, especially probably it could be for the MSMEs, aviation, tourism. These have been on their radar right now. And very importantly, as you pointed out, that it shouldn't be too late for them to come and announce. But right now, what is announced by the RBI, what is announced by the government, do you think that's enough?
No, definitely it's not enough. There are very good steps which have been taken. But I would say, for example, that we may have to extend this 1.7 lakh crore relief program in the first quarter. Let's assume that they do it by June end. We'll have to extend the moratorium by to their work at least up till the end of September. That is can be taken for certain. Now, if you look at it, I think whatever the RBI has done is the best that it can do as a central bank. So you have been opening up so many windows for the NBFCs, you've opened up for the bond market. But what we have seen is that it's only the better rated companies which have been managed to get these funds. And also, if we talk to bankers, they're actually hesitating to go ahead with lending because it's easy for us to tell them to lend today because after 2 years, they don't want to be hounded by the CBI and CDC and CIC. So we talk to bankers, they're actually very apprehensive and they're going slow. So and I think one of the reports in the papers today say that even this window which has been opened up for the mutual funds, there are not too many banks who are going and borrowing money for that. So there's a lot of skepticism which is there as far as bankers is concerned. So from the point of view of the RBI, the central bank is providing liquidity, they're opening up specific windows. In fact, I feel there could be another window opened up for MSMEs. But the whole question is that will the banks be willing to lend? Ask them to do first, and we'll have to extend the moratorium by another 3 months. That's a logical corollary which is there. And then at some point of time, the money has to be repaid. So companies which have not been working for 3 months will not be in a position to service the debt in July. Similarly, if the aviation industry is not working for 6 months, there's no way in
Correct.
which they can service the debt after that. So where do we end? So therefore, I think it's going to lead to lots of complications, lots of intricate issues are going to come up. I just hope that the government has actually thought through it, that we rushed in for the lockdown. Maybe it was a good move. The casualties have been lower, probably because of that.
Mm.
We really don't know, but at least data says that we were better off. Now the question is that when we come out of it, do we know how to come out?
How to
This
come
is just
out
a
of it,
kind of a tangle
absolutely.
we've gotten into.
Right. And what is the kind of threshold level of fiscal deficit that could make rating agents jittery right now?
No, I don't think the rating agencies will be jittery about any fiscal deficit number because I think countries all over are talking of 10, 15%. I'm talking of the developed countries.
Hmm.
So I think this is when the Indian government should take a bold move, and you have both the center and the state saying that let us also cross that 10% level. I think even under normal conditions, we will be getting closer towards the 10% fiscal deficit level, that is the center and states combined, because of the shortfall in revenues. The disinvestment programs are not going to work out. Expenditures are going to increase even without any aggression. We'll
Correct.
probably be coming close to the 10% mark. I think it makes a lot of sense that the government should go ahead with a real boisterous program. And we should also keep one thing in mind, that when we talk that of the government spending a lot, having a fiscal deficit of 12% or 15%, it is going to be inflationary after 2 years. And we should be prepared for RBI to start increasing interest rates. It happens every time we have a crisis, we have a monetary stimulus, a fiscal stimulus, ultimately inflation will have to go up. So I think even industry has to be prepared for it. Today, they're all saying bring interest rates down. They've come down. We're saying government should spend, set up funds, guarantee loans. All this, I think, will be a part. I think Mr. Khan told you about it. I'm quite sure they're actually looking at some things like this, that we set up guarantee funds to make sure that we provide this comfort to the banks. But at some point of time, it's going to lead to excess money in the system, and it's going to be inflationary, which means that maybe a couple of years down the line, we may have to increase interest rates, and these happy days of low inflation, low interest rate may not be lasting forever.
Correct. Yeah, that's something we'll have to bear in mind. But what's the opinion that you have with regards to direct monetization of the fiscal deficit by RBI? Would even, some limited monetization be a red flag?
It's not allowed by statute. I think ever since we got rid of that ad hoc treasury bill system of monetization of deficit and brought in the WME, I think technically it cannot be done today, but nothing stops them from changing the law and ensuring that the RBI monetizes the deficit. I don't see much harm in the RBI monetizing the deficit directly. Even today, for example, if you look at it, if the RBI is going in for large scale open market operations, you're going in for all these LTROs and you're giving a lot of money to the banks, it is nothing else but doing that you're monetizing the deficit anyway. Now, the only difference is that if I give money directly to the government of India, the advantage is that I won't be flooding the market with excessive government paper. Today, I think one of the reasons as to why the GSEC yields is still holding above 6%. The 10-year GSEC is above 6%. In fact, it was 6.3, 6.4 sometime back. Now it's probably down to around 6.1%. Is that the market fears that there's going to be a surplus GSECs which are going to come into the market, which is going to lead to the prices actually coming down, which means that interest rates are going to go up. So I think that's the kind of tension which is there in the market today. So in order to sort of take care of this concern, I think direct monetization is definitely a good idea. But I think the RBI governor did mention the policy under 27 that it's not allowed as of now. I think somebody in the media had asked him the question. And I would tend to think that as of now, the RBI is not thinking of it, but nothing can stop them. They can always bring about the changes in the statute to allow the RBI to do such a thing. It will be good, definitely, from the point of view of the market.
Right. And with the expenditure side of it as well, Madan, the government has been talking of expenditure cuts. What areas of spending will the government prioritize if you have to talk about cuts? And do you think there is a possibility that there could be a cut in terms of capex? And will infra spending then take a back seat?
Absolutely. I think the only discretionary spending which the government has is the capital expenditure, and that, to my mind, is which is going to be cut. There can, of course, be rollovers. I think that's one of the favorites of the government, where you keep rolling over expenditure and you don't pay the subsidy right now to CI. If CI borrows from somewhere else, they borrow from the bank, so they take it from the NSSF and you roll over. But if at all there going to be any kind of cut, there's be more of capex, because you see a lot of government expenditure is more or less. Yeah, so I was saying it's going to be finally capital expenditure which will have to bear the brunt of it, because you cannot touch the other expenditures which are more or less committed, and they're more or less a part of the relief measures. So the relief measures which the government announced was, that said very clearly, it is over and above what was there in the budget. So hopefully the 1.7 lakh crores is not already a part of the NREGA program. It's something beyond that which they have announced. So to my mind, I think it's only capex is something which could be cut. So we cannot expect any big bang capital expenditure from the government. It's going to be more likely that they will complete the ongoing project rather than going for new projects.
Right. And where do you think that the government should prioritize its fiscal package? What sectors, according to you, are of priority right now? Because if we're looking at an expenditure cut that could be coming in on the infra side, number one, yes, your unemployment rate is going to be affected as well. That's going to go up, because infrastructure also as a sector is the one which is actually recruiting majority of your migrant workers.
So, to my mind, I think what the government is going to focus on, or what they will definitely continue to focus on, is on the relief kind of measures. So that's going to be a pure revenue expenditure, which is going to be incurred. But I think the place where it can really make a difference, where to my mind it may not require immediate funding, is more on the contingent liability side, where you start giving guarantees to loans being taken by various sectors. So today you raised this issue of MSMEs, we have raised the issue of aviation or other vulnerable sectors which have actually been demolished on account of the pandemic of this pandemic. So I think this is where the government can actually step in and start guaranteeing loans being taken by certain sectors. I mean, there can be a criteria laid down. They can work it out with RPI and SEBI as to how you do it, whether it's going to be bonds which are going to be guaranteed or they're going to be loans which are going to be guaranteed by the government of India. But I think these kind of things have actually taken place in other countries. Funds have been set up, I think in Germany, they've been set up probably also in Japan, where you're actually setting up funds in order to guarantee loans which are being taken by corporates. So it's a kind of, it's a kind of, I would say, a QE kind of thing without really putting in liquidity right now. There's, of course, a major problem of model hazard that people will borrow and not repay. That's something which one has to consider. But I think doing an off-budget program, which doesn't require immediately any kind of funding, is something which I think is something which the government should definitely go ahead for, which will really help the call center.
Right. And what's the sense that you're picking up, Madan, especially in terms of what's happening with crude across? I mean, we're seeing it being an oil importing nation, there are going to be benefits as well in terms of lower crude prices. But if you talk about the lockdown, I think fuel consumption is something which has taken a major hit in the month of April. This will probably continue for the next couple of months as well. So, if you have to balance this equation with regards to lower crude prices versus the revenue loss that the government would be staring at, what does that number look like then?
No, in fact, I think it's a kind of a mixed blessing which we
Hmm.
have when you're talking of lower crude oil prices, because it comes at a time when nobody is driving a vehicle, the transportation system has come to a standstill, the airline industry has stopped
Correct.
functioning, which really means that there are no direct benefits which are coming. So maybe your WPI and CPI numbers show that inflation has come down because crude oil prices come down, but there's been really no tangible benefit. And I think because of crude oil prices coming down, I think one of the reasons as to why the exchange rate has been very, very steady is that our overall balance of payments now looks firm. Even though we have seen FPIs exiting, we're not seeing too much of FPI come in. So overall, the balance of payments, the fundamentals which drive the exchange rate have been favorable because of lower crude oil prices. But I think the major concern, of course, for the government, I think that's another thing which is feeding into the revenue of the government, because I think both the state and the center earn something like 5.5 to 6 lakh crores in the form of taxation directly from oil products. And today, when you're saying consumption has come down, the basic value of your petrol and diesel has come down, it automatically means there's a major hit which the government is going to take. They have increased the taxes in some cases, but then the fact that nobody is consuming the products itself is a major blow for the government. So I think some kind of a balance or an equilibrium is required, but this is not something which can happen immediately. I think it'll happen only over a period of time. We need to have the lockdown removed, conditions return to normal. And my own sense is that it'll take at least 6 months before anybody has confidence to restore even the public transportation system, which is one of the major users of petrol and diesel.
Right. And do you think there is a case for the state governments to borrow and spend more to support the economy? Because, and this I'm talking particularly if you look at states which have been hard hit, like Maharashtra, say Gujarat, their fiscal position is better shape. Uh, do you think and they have relatively low debt levels as well?
So they are definitely in a position to spend, and I do believe that a number of these states would be taking action, given the kind of fiscal space which we have, and the states which you mentioned, Maharashtra and Gujarat, are definitely states which are operating well below the
Mm.
3% mark. Other states are constrained by the FRBM norms, which put that 3 or 3.25, 3.5, whichever the cases. And we do believe that there could be some kind of flexibility provided in terms of having higher fiscal deficits for all states. Because we should remember that lots of state governments are going to suffer in case in the current situation, because the transfers which come from the center are not going to come about. Similarly, if you're talking in terms of GST, when talking of a lockdown, we always had this magic figure of saying 1 lakh crores per month are the GST collections. Now, just think of a month where we didn't operate in April. I don't think they would have gotten even 15 or 20% of their total amount. So there
Right.
are going to be hits which the state governments are taking because of lower tax collections, which itself would be pushing up the fiscal deficit, even if they don't go in for higher expenditure. So I think there will be a route of caution used, but definitely I think at the level of the Reserve Bank and the central government, there needs to be more flexible when it comes to the fiscal, setting the fiscal deficit limits for the states. And I have a feeling that they would probably relax it by at least half to 1% for the year. But we may not hear of it just now, maybe after the first quarter or so, when they take a review of how the states are performing. And because it's also a reflection of the state center's inability to do those transfers. Because the
Right.
Finance Commission talks about certain transfers. Now, if the center
Hmm.
doesn't have the funds, how can it transfer to the states? And we should remember that the WMA levels have been increased primarily because even the RBI is cognizant of the fact that when there's a shutdown, people don't pay the taxes, nobody's paying the taxes. Automatically, the revenue of both the center and states get affected. So there will have to be some kind of flexibility shown there. And I think that's another concern of the market because the market just thinks there's going to be a lot of government paper coming in. If the center borrows
Correct.
directly from the RBI, what about the
Hmm.
states? The states have to come to the market. Will the RBI start funding the states too? I think these are issues which will be coming up in course of time.
Right. That's an interesting point that you've made as well, Madan. In fact, there will be a lot of work, I think, for the government, for the RBI as well in current times. And it is going to be a double whammy situation for them as well as to which side of, the bridge to swing towards. Because any decisions they take, there are going to be pros and cons that will come in and there could be repercussions. But thank you, Madan, for joining us on the show and with great insights. We will come back to you as well once things start picking up, once the lockdown is done, to understand as to what has been the difference between now, whether the 1.3% goes lower in terms of your GDP estimates now, or do we see an improvement with the kind of measures that the government would be taking? Thank you very much for joining us on the show. Stay home, stay safe.
Thanks.